Hey guys, it's Nick, and in this video, I want to talk about what's going on in Europe with natural gas prices. So you've probably seen all these articles about how natural gas prices are going crazy in Europe, and they actually reached a high of $230 equivalent of a barrel of oil. And recently they spiked to about 100 euros per megawatt hour. And just to give you some context, about a year ago, they were trading at around 15 euros per megawatt hour. Now, natural gas is usually way more volatile because it is very hard to store, unlike crude oil or coal. And Europe doesn't produce a lot of their own natural gas, except for in the Netherlands and Norway, but most of it comes from Russia. And so there's three ways you can get natural gas. You pump it yourself out of the ground, or you have somebody bring a pipeline in and pipe it into you and you store it, or you import it in LNG or liquefied natural gas. And the capacity for that is limited because you need these big refrigerated tanker ships that have to cool down the natural gas into liquefied natural gas to transport it. So the Russian energy company Gazprom, which is majority owned by the Russian government, is the one who supplies natural gas through pipelines to Europe. Now, they've just recently finished a second pipeline called the Nord Stream 2 that runs right along the Nord Stream 1 into Europe to give Germany and other European countries natural gas. But this pipeline has been opposed, even though there's already an identical pipeline right next to it. But it's been opposed by a lot of European countries at the behest of the US government, who doesn't want Russia to get too much economic and political power over Europe. And the US would like to sell their natural gas to Europe instead of Russia also. So right now, the Nord Stream pipeline is not approved. It's not licensed for use yet, although the Russians say that they are testing it out and they are pretty much ready to start pumping when it does get licensed. So because of all this political theater going on, a lot of people are accusing Russia of being behind the spike in natural gas prices to get the gas prices up so that Europe could fast track their Nord Stream 2 pipeline to get it open so that they can start pumping gas to Europe to kind of alleviate the problem that supposedly Russia helped create. And as I'll show you, just about a year and a half ago, there was a huge glut in natural gas in Europe to the point where they wanted to shut down production in Norway for a while. So there's a saying, the cure for low prices is low prices, which means if prices get low enough, people cannot economically produce it and make a profit. So they stop producing it, less gets produced. And as people use it, the price will eventually go up. The same thing goes for high energy prices. The cure for high energy prices is high energy prices. So if these prices get high enough in Europe, then a lot of companies will start producing more natural gas and try to export it to take advantage of these higher prices until the price comes down enough that it's no longer worth it to invest more in producing more. So let's take a look what was going on in the natural gas market in Europe just like a year and a half ago. So here is an article from a website called Natural Gas Intel. And this is April 29th, 2020, saying LNG supply glut likely to outlast demand for years, says IGU, International Gas Union. So following a record year of low prices driven by increasing liquefied natural gas production in 2019, global supply glut is likely to persist for at least another 2 years, according to the IGU in its annual report this week. This will mean continued depressed prices. This is then likely followed by a period of recovery with renewed uncertainty around the middle of the decade. And here's our article, Zero Hedge, Europe's natural gas glut may force supply cuts, Thursday, June 4th, 2020. What a difference a year makes. Europe is so awash with natural gas amid weak demand and limited storage capacity that gas suppliers may have to cut flows to prevent natural gas prices from plunging further. The natural gas glut has depressed the prices at key European hubs, such as the Dutch TTF benchmark, which is like a virtual hub. Prices didn't move much even after the biggest gas exporter to the continent, Gazprom, saw its flows on a key pipeline fall to zero last week. Natural gas demand is very weak, and low prices are signaling supply must be cut, an energy aspects gas analyst told Bloomberg. According to another analyst, Norway could delay some production from the Troll and Oseberg fields due to the weak prices. And for liquefied natural gas, U.S. exports are currently unprofitable because the natural gas prices in Europe are lower than the prices of the U.S. Henry Hub benchmark. It says, although Europe's total gas demand is down in comparison to last year, reductions in domestically produced gas and Russian pipeline imports have created more room for LNG to be absorbed. However, the single largest fundamental difference from 2019 is Europe's vast gas inventories, which currently sit at record seasonal highs. So this is the European natural gas storage in 2019 that they're talking about as of September 21st of each year. And they had 95.79% filled to capacity. Right now, 2021, as of September 21st, they only have 72% filled to capacity. And of course, they're forecasting a really cold winter. So that's why they are scrambling right now. And here, Gazprom hikes export prices as Moscow urges Europe to fix ties to avoid more gas shortages. So this is why people are thinking that Russia has a hand in these prices going crazy like this by not supplying more natural gas to bring the prices down. So Gazprom raised its 2021 price guidance for natural gas exports while signaling caution on volumes it could ship as Europe's energy crisis worsens. So they're saying that they may not be able to ship all of the gas that Europe is demanding. However, if you go ahead and give us the license for Nord Stream 2, hint, hint, we could probably see if we can get you some more gas to help you out. So Russia supplies 35% of European gas needs, but they reiterated that shoring up inventories at home was its top priority. And only after it has refilled its own storage facilities by the end of October would the company look to potentially increasing exports to continental Europe. And you see, these are Russian natural gas supplies to Europe in 2020. They hovered around the 800 level, and now they dropped down to the 200 level, back up to 800 in September, and now they've fallen again below 200 in October. So Gazprom increased its full year guidance for exports to Europe and Turkey to a range of 295 to 330 per 1,000 cubic meters. And so natural gas prices came down from that 100 euros per megawatt hour when Putin suggested last Wednesday that his country could boost deliveries to record levels, partially easing an energy crisis sweeping Europe. And Goldman Sachs says, we maintain our base case, which assumes Russian flows to northwestern Europe through existing pipelines will normalize from November from reduced levels this month, and that the newly built 55 billion cubic meter Nord Stream 2 pipeline will be operational this winter with only a marginal net contribution to northwestern European supplies. Until then, we continue to see a risk that Gazprom might have to rely on taking physical delivery at the TTF hub to complement their pipeline flows to the region to satisfy winter contractual obligations, given its local storage sites remain nearly empty. So a lot of people think Gazprom is just selling at whatever the current market is to Europe. That's not the case. They have these contractual obligations of long-term supplies at contracted prices. And if they can't meet those obligations, they will actually go onto the open market at the TTF hub to buy natural gas on the open market to satisfy those contractual obligations. So this is kind of where the EU shot themselves in the foot. Here it says, Chivas also told the FT that the crisis had been aggravated by EU regulations that force Gazprom to supply a proportion of gas to Europe on the freely traded spot market terms, rather than through long-term contracts which Brussels has argued are uncompetitive. So the geniuses in Brussels said, yeah, instead of giving us a long-term contract with the price spelled out, a proportion of what we get from you has to be bought on the spot market. And so if the spot market is up 600% from 15 euros to 100 euros, then that's the price we're going to pay. It's a little bit like what happened to people with their electricity bills in Texas last year that bought their electricity through Griddy at the spot market rate. And when it spiked up, some of these people had electricity rates of crazy amounts and bills, $5,000, $10,000, $15,000 electricity bills that they couldn't pay. And in the category of articles that really didn't age well, this article posted June 2nd, 2021, 4 months ago. The dash away from gas, how the Netherlands kicked a big fossil fuel habit. The Netherlands plans to abandon its gas grid and use this monumental shift to drive the decarbonization of its wider built environment. In 1959, the 9th largest gas field in the world was discovered in the northern province of Groningen, and within just 5 years, nearly all Dutch homes were connected to the gas grid. As of 2018, gas heated 9 in every 10 homes in the Netherlands, and 38% of total energy consumption went towards heating. In 2019, the Dutch decided to go completely gas-free by 2050 and halt domestic production by 2030, although this could happen as early as 2022. I'm going to guess that's not going to happen. So the Netherlands, which is the largest natural gas producer and has the most important natural gas market, the TTF exchange, is going to get rid of all of their natural gas. So here's a percentage breakdown of all the suppliers of energy to Europe. And Russia is 46% of the coal supply to Europe. United States number 2, Australia 3, Colombia 4. Natural gas, Russia supplies 41% of the EU imports of natural gas, Norway a distant 16%. And for crude oil, Russia is by far the biggest exporter into Europe, followed by Iraq, Nigeria, Saudi Arabia. So number 6 is Norway. So guys, that's a look at the situation with natural gas in Europe and Russia and Gazprom and why prices are spiking so high. It seems they are falling all over themselves to get rid of any kind of natural gas or coal or oil, yet at the first sign of trouble or the first sign of winter, they are begging Russia and other countries to supply them with as much fossil fuels as possible. So this demonizing of fossil fuels in Europe and the US is just going to lead to higher prices down the road if they are discouraging American and European companies from investing in exploring for more oil and gas. And the companies that are going to benefit from all of this, from these higher prices, are companies like Gazprom, other Russian oil companies, Saudi Arabia, and former Soviet countries as well. So if you agree with me and think energy prices are going to head higher, you might want to look at some Russian oil companies. Guys, if you like this video, hit the thumbs up, and I'll see you in the next one. Thanks for watching.